Have you ever imagined a world without cash?
No more crumpled bills in your wallet, no more digging for loose change.
It might sound like something out of a sci-fi movie, but it could be closer than you think. The reason? A new form of money is on the horizon. Central bank digital currencies, or CBDCs. So, what exactly is a CBDC? Think of it as a digital version of the cash in your pocket, issued and backed directly by a country's central bank like the Federal Reserve in the United States. Unlike the money in your bank account, which is a liability of a commercial bank, a CBDC would be a direct claim on the central bank itself. It's like having a bank account directly with the Fed. Now you might be thinking, wait, I already use digital money all the time. I tap my card, use my phone to pay, and transfer money online. What's the big deal? That's a great point. The money we use for those transactions is digital, but it's commercial bank money. It moves through a complex network of private banks, payment processors, and clearinghouses. A CBDC would be a new foundational layer of the monetary system, a public option for digital payments that exists alongside the private options we use today. So why are governments and central banks around the world, from China to the European Union, so interested in this? There are several potential benefits they often highlight. First, efficiency. A CBDC could make payments faster, cheaper, and more streamlined, especially for cross-border transactions, which are currently notoriously slow and expensive. Imagine sending money to a relative in another country in seconds, not days, and with minimal fees. Second, financial inclusion. Billions of people around the world don't have access to traditional banking services. A CBDC could change that. With just a basic smartphone, people could have access to a secure, free, or low-cost digital wallet, allowing them to participate fully in the digital economy. This could be a game-changer for poverty reduction and economic empowerment. Third, a CBDC could give policymakers more powerful tools to manage the economy. For example, during a crisis like the pandemic, the government could send stimulus payments directly and instantly into everyone's digital wallets, bypassing the delays of mailing checks or relying on bank transfers. It could offer a much more direct and rapid way to deliver financial aid. But as with any major technological shift, there are also significant concerns that have people worried, and for good reason. The biggest one is privacy. Physical cash is anonymous. When you buy a coffee with a $5 bill, there's no digital record of that transaction tied to your name. A CBDC by its very nature would be different. Every transaction could potentially be recorded on a central ledger. This raises a huge question. Who has access to this data? Could the government see every single purchase you make? Could this information be used to track your behavior or worse, control it? Imagine a scenario where certain purchases are deemed undesirable and are blocked. Or what if your digital money came with an expiration date to force you to spend it? A concept that economists have discussed. This programmability of money is both a powerful feature and a potential pitfall. It could be used for good, like automatically distributing social benefits. But it could also open the door to unprecedented levels of social and economic control. Another major concern is cybersecurity. A centralized digital currency system would be a massive target for hackers, hostile nations, and cybercriminals. A successful attack could be catastrophic, potentially wiping out people's savings or even destabilizing the entire financial system. Ensuring the security and resilience of a CBDC network would be a monumental challenge. And what about the impact on the existing banking system? If everyone starts holding their money directly with the central bank, what happens to commercial banks? They rely on our deposits to fund loans for mortgages, businesses, and cars. A mass exodus of deposits to a CBDC could starve them of funding, potentially leading to a credit crunch and financial instability. Banks would have to fundamentally rethink their business models. This brings us to the big question. Could a CBDC really mean the end of cash? It's a real possibility. Some governments might see a CBDC as an opportunity to phase out physical currency entirely. Why? Because cash facilitates the shadow economy and illegal activities. It makes tax evasion easier. Eliminating cash would give governments far more visibility and control over all economic activity. However, a cashless society is a deeply divisive idea. For many, cash represents freedom, privacy, and independence from the financial system. It works during power outages or internet disruptions. It's a lifeline for the most vulnerable in society who may not have access to or trust digital technology.
Forcing a transition away from cash could leave many people behind and erode fundamental privacies we often take for granted.
So, where do we stand now?
Many countries are in the experimental phase. China is leading the pack with its digital yuan, which has already been trialed by millions of citizens. The European Central Bank is moving forward with its investigation into a digital euro. Other nations like Sweden are also well advanced. The United States is taking a more cautious approach, studying the pros and cons without committing to a digital dollar just yet. The debate is complex, balancing the promise of a more efficient and inclusive financial system against the serious risks to privacy, security, and personal freedom. The design of a CBDC matters immensely. Will it be anonymous like cash, or will it be fully traceable? Will it be held in accounts directly with the central bank, or will private companies act as intermediaries? These design choices will determine whether a digital dollar is a tool for empowerment or a tool for control. The future of money is being written right now. This isn't just a technical upgrade. It's a fundamental shift in our relationship with money and power. It will affect everyone, from the biggest corporations to the individual saving up for a rainy day. Understanding what a CBDC is, what it promises, and what it threatens is crucial for all of us. Because the decisions made in the next few years will shape our financial landscape for generations to come. As this technology develops, it is vital that we have a broad public conversation about what kind of financial future we want to build. The convenience of a digital dollar is tempting, but we must not trade away our privacy and freedom for it. The end of cash is no longer an abstract idea. It's a policy choice that we may soon have to confront. Thank you so much for watching. This is a huge topic, and we've only scratched the surface. If you want to keep learning about the forces shaping our economy and your wallet, please make sure to subscribe to our channel, Bills Explained. Hit that notification bell so you don't miss our next video. We'll see you in the next one.